Welcome back, traders, to the Impact Trading Services Gold Analysis and Signal Service. We are going to look at Wednesday, January the 4th. Now remember, this is our daily practice. You want to practice drawing support resistance levels, supply and demand levels every day so that we can see where our signal comes from for Wednesday, January the 4th. Go to the monthly chart. We'll start drawing our supply and demand support resistance levels. Now again, this is a June supply and demand support resistance level. This one back here is August. All right, so we have above and below. Those are our monthly. Those are our monthly, January 3rd. We're going to be trading the 4th. So we want above and below. We know we have a breakout of this pattern here, this triangle pattern. And then we see above in the 1860 area, that's an institutional 0-0. Now remember, the 5 zeros and the 0-0s, that's 1860. We can expect probably a retrace. Now again, this is the first time in the month, first time in the year that price is coming back to test these areas. There should be a lot of institutional sellers in this area. So price is moving up into an area of resistance. We know because we have plotted this on the chart. We've drawn our levels on the chart. We have done our homework. We did our homework for all of the past year. We did our homework for 2022. We did our homework for 2021. And the data tells us every single month, gold, weekly, monthly, daily, when it enters into these areas, price retraced at least 1,000 pips. Now we say 1,000 pips. It actually retraces more than 1,000 pips on monthly and weekly moves. But we say 1,000 pips because 1,000 pips, if you do 1,000 pips daily, you are a seven-figure trader. So you can plan your trades with profit targets of at least 1,000 pips. All right, so we have our levels drawn. Now it's time for us to be patient to see what price does during this trading day at these levels. Go to the 1 hour. Trading day for the 4th starts at 2300 Asian session. And then now we have all of our levels drawn. And then let's see how the trading day plays out. Well, all right, for the 4th, our first trade signal would have came during the London session 8 o'clock hour between the levels of 1600 and 6500. Price actually hit 6500 right on the pip. Again, that is a 500. We saw that on the 3rd, and gold is consistent at 500s and 00s. You will see that pattern over and over and over and over again. So the trading day, our first signal would have came for the London session to sell, London session, between the area of 1860 and 1865. our new area of support and resistance. First time in the month, price has entered into this area, and then price retraced 1,500 pips. That's a 1,500 pip retracement from this area. You would have placed your trades in this area, and then you would have placed your stop losses just right outside of the area. That's your stop loss here. Trades in this area, stop losses right outside of the area. Price moved up into a resistance, area of resistance. Then price moved down into an area of support. So we could have had another trade right here in this area of support now. In this area of support during the intraday trades, an intraday trader would have traded these two areas. All you needed is one or two trades for 1,500 or more, and you have a very, very profitable day. Very profitable day. So let's look at on the 3, 5, 15 entries. You see your entry patterns here. You've got a 2-bar pin bar, 3-bar reversal. Here, entry pattern here, 5-bar reversal to go short. You can look at it on 3, 5, and 15 minute. Entry, 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 entry short. 3, 5, 15 minute. Entry long. Entry, 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 entry short. Entry short. 3, 5, 15 minute entry long. So intraday traders, you have your levels to earn a lot of pips. This retracement retraced at least 1,000 pips. If you are a swing trader, that is a good swing trade. If you are a trend trader, then trend traders would have received a signal to go long here. If you're a trend trader, then you would be taking profit here, waiting till price came down, and then you would have entered your longs here for those who only trade with the trend and position traders. Position traders would have been profiting here, entering long here, profiting again from here to here, entering long here. Now look at the patterns. You have two triangles that broke out. You have a breakout here, retest here. That's on the 4th. On the 3rd, you had a breakout here. On the 3rd, you had a breakout here, a breakout here, and a retest here. So as you continue to trade supply and demand, support and resistance, you will also start seeing patterns in the market. We have a trend channel that's formed in an uptrend. That happens in every trend. On every month, you have a trend channel forming on every uptrend. You have your breakout of your patterns. You have supply and demand, support and resistance. And then you have your institutional orders of supply and demand. Now remember, understand if there was no charts here, that the market is going to move only based on supply and demand order blocks. The market does not move unless somebody is placing a sell order or a buy order. So understand that in your trading. The market moves only because of supply, demand, order blocks, only because of market orders. So that's why we do not use indicators, because indicators are lagging. The market will not move if there is not an over imbalance of buyers or an over imbalance of sellers. The market only moves because there are orders, institutional orders, at the 1860 level and the 1865 level for this trade. And then on the chart is just a representation of what the buyers are doing and the sellers are doing at the institutions. And that's all that is. That's why you do not need indicators that lag. So when price moves and you get price action, then you know that there are buyers or sellers in the market. And that's our method. So we want to teach clean trading and understanding how the market moves, where the orders are, and then place profitable trades based on levels of support, resistance, supply, demand, as we continue to study the chart. So these were your trade signals for intraday trades, for swing trades, and for position traders. Every trading style, supply and demand, support and resistance. The data is true, the levels are true. How do we know? Well, let's go look at the charts. The datas are true, the levels are true, and the orders in the market are true. Remember, orders in the market are what drives the price up or drives the price down. Alrighty. Happy trading in 2023 to a profitable trading year. See you in the next video.